because the characteristics of an uptrend is higher highs and higher lows. And since markets came to this particular low and actually broke it to go lower, this is no longer an uptrend, but now a downtrend. Why? Because this is no longer the characteristics of an uptrend. So a structure shift is an indication that the current trend is about to end and the new one is about to begin in the opposite direction. So once there's a market structure shift, the direction that you're taking a trade in before, it changes. So if you are taking buys here, because an uptrend, if you're in an uptrend, you'll be taking buys now, buy continuations. Once there's a market structure shift here, I will signify that with MSS. Once there's a market structure shift here, once that has happened, you're no longer going to be looking for buys in this trade. What you're going to pay attention to is to look for sells. Same thing as when market's on a downtrend. You can see the downtrend is series of lower highs and lower lows. So this is a lower high, and then this is a lower low. You now see a lower high, you see a lower low, you see a lower high, you see a lower low, you see a lower high, then a lower low here. So for each high that comes, it's going to be lower than the previous one. You can pay attention. You can see this was the last high. The second high is lower than it. The third high is also lower than the last one. The fourth high is also lower than the last. So that signifies a downtrend. But in a situation where market now does something like this, so this is the last lower low here, and the market does something like this. So instead of now continuing this downtrend by making another lower low here and going down, market now does something like this, breaks this high and makes a higher high. So this is no longer a downtrend. So there was now a market structure shift here. So this particular high that got broken, the market could have made a lower high here, but it made a higher high. This is where your market structure shift is. So in this market, this is now where your market structure shift is. So I'll signify that with MXS as well. So, like I said, whenever there's a market structure shift, we're not going to be looking for trades in the opposite direction. So, the market structure shift is an indication that the current trend is about to end. It's an indication that the current trend is about to end. And the new one is about to begin in the opposite direction. So, for market structure shifts, we're taking a trade in the opposite direction. So if for market structure shift, if the previous trend was an uptrend, once you notice a market structure shift occur, the place you're going to be taking a trade to now, instead of taking a trade on to buys, you're not going to be taking sells. That is what it means by market structure shift. For example, now if you pay attention to this trade, market was on an uptrend, so it was making higher highs and higher lows, higher highs and higher lows, higher highs and higher lows, higher highs, higher lows, higher highs. The market now came here, broke this low, and started making like once this low got broken, there was a market structure shift. So pay attention now. Once there was a market structure shift in this trade, I'm no longer going to be paying attention to take buys from this particular stuff. What I'm going to be looking for now is sell. So first of all, that is the structure part of your strategy. Now mark out your market structure shift. That is number one part of the strategy. Now, another thing I pay attention to in the structure part of this strategy is break of structure. Now there are two. I said market structure shift and then break of structure. Market structure shift is an indication that the current trend is about to end and a new one is about to begin in the opposite direction. So in market structure shift, you're taking a trade in the opposite direction. But the difference between it and break of structure is in break of structure, you're still going to be taking a trade in that current direction that market was trending at before. So this is what I mean now. An example of a break of structure. So a break of structure is a scenario where market breaks a particular key level in price while still remaining in its current trend. So let me just type it down. Break of structure is a scenario where price breaks a key level. Right? For example, a resistance or support level while still being in this current trend. So these are the two things that I look out for in the structure part of my strategy: market structure shift and then break of structure. So for market structure shift, I'm looking to take a trade in the opposite direction of the previous trend. But in break of structure, you're going to take a trade in the same direction of that current trend, but it has to break a key level price. So this is what I mean now. I'm giving you an example of a market structure shift. Let me now give you an example of a break of structure. So for break of structure, let's say this is a resistance level in the market. So I'll mark this out as a resistance level. This is a resistance level. And then price was making a series of higher highs and higher lows, which is an uptrend. You see higher highs, you see higher lows. You see higher highs, you see higher lows. You see higher highs, you see higher lows. Then price is just something like this. So this is a break of structure. Why? Because there was a key level in market that was broken. For example, a resistance level. This is a resistance zone. So as this market was broken, it's still going. So you're still going to be looking for trades in that same direction that market is at currently. A market structure shift breaks structure to the opposite side, or it changes direction to the opposite side. But in break of structure, it breaks structure to that same trend is on currently. So for market structure shift, if market was previously on an uptrend, once it occurs, you start looking for sales. But in break of structure, if market is on an uptrend, once it occurs, you're still going to be looking for buys. Same thing as if this was a support zone right here, and market was on a downtrend, making a series of lower highs and lower lows, lower highs and lower lows, lower highs and lower lows. And all of a sudden, it does something like this. It has broken this key level, which is a support zone. So now, what you're still going to be looking for is still sales, because this was a break of structure and not a market structure shift. If it was a market structure shift, what you'll be looking out for market being on a downtrend and there's a market structure shift, what you now start looking out for is buys. Or since it's a break of structure, market will break a key level, but it will still remain in that current trend it was on before. That's the difference between a break of structure and the market structure shift. These are the two things I pay attention to when I'm looking at my structure part of this strategy. So that is for the structure part of the strategy. I have to go on to the liquidity part of the strategy. So what is my liquidity in this case? What I use as my liquidity is actually inducement. So what I use as my liquidity is actually inducement. So what is an inducement? Inducement is the first valid pullback that market makes after there is a shift in market structure or a break of structure. Let me repeat myself. An inducement An inducement is the first valid pullback that market makes after a market structure shift or a break of structure. Now, what do I mean by this? Once market has triggered a market structure shift or a break of structure, there's going to be a pullback close to where markets either shifted structure from or broke structure from. So in this case, market was on an uptrend, making a series of higher highs and higher lows, higher highs and higher lows, higher highs and higher lows, higher highs, they now made a lower low. So this is where our market structure shift is. So after the market structure shift, market will now make a pullback towards that direction that it shifted structure from. After making the pullback, it will continue the move. So if the structure shift was to the downside, it will make a pullback to the upside. then continue the move to the downside. So what makes a pullback valid is that it has to cover up at least 50% of the last move, or at least close to where the last move stopped. This is what I mean. Let's say this is a resistance zone now, and market does a break of structure here. After breaking structure, this is now the first pullback it makes. This first pullback has to push markets up close to at least this level, before it can come down to trigger the main point of interest and then continue buying. I can either take it close to this level or take it equal to that same level before coming to trigger the main point of interest and then start buying. Or it can take it close to, the pullback can actually take the market above that level before coming to trigger the main point of interest and buying. But whatever you do, you have to make sure that it pushes market close to at least 50% of that last move, even if